And actually, one of the most interesting stories I think we're going to discuss today is the fact that a very famous investor is calling the end to the AI and high growth tech stock rally. So, everybody probably knows Michael Burry, the famous big short investor. He is back in a big way. It was released with a 13F that nearly 80% of his portfolio is now short, and in two names, with Palantir being 66% of his entire portfolio short, and Nvidia being the other 13.5%. So nearly 80% of Scion Asset Management. I mean, he is going out off on a limb by himself here, which I don't think is anything new to him with the history he's had in the markets. But still, he's got to have some sleepless nights, like seeing these stocks rally, being positioned so short, such a high percentage of his portfolio. Do you think this will end up good for him? Is it going to be the Big Short 2.0? What can he be seeing, and why would he be so confident in this trade he's put on?
I mean, I'm never inclined to disregard what Michael Burry's doing. He is very comfortable doing his own analyses. And like you've heard me talk about, like, I think I tell on this stream sometimes that the most important lesson I ever learned was like my first boss out of college sitting me down and staring me in the eye and telling me there are no shortcuts. I think that I try to implore other people to do that. Like, yeah, we try to shorten the learning curve for you, but there's no substitute for learning things, doing your own research, doing it well. Michael Burry has made a living out of doing his own research, and there is no way he's putting his finger to the wind and saying, now's the time to bet against Palantir and Nvidia. The issue as I see it, though, I do think he has real data. I'm not sure this rally, at least to the degree of certainty as, say, the Big Short, is operating in a data set that isn't some, lower probability event than, I agree. I was in that situation. I worked at Bear Stearns in the summer of 2006. I know what a mess that was. Actually, funny story, I actually turned them down. I am proud to say that I worked at Bear Stearns and I did not go back, even though they offered me, a more elite internship position. Because even as a 21-year-old, I was like, I didn't have the data, but I did go through a lot of those mortgages. I did see what a mess it was. And I said, I don't know what's going on here, but I'm not sure it's sustainable. So yeah, I think that you got to take it seriously, but I'm not sure I'm ready to join him in that bet.
He's putting so much of his portfolio, 80% in this trade. There seems to be like not a lot of risk practices. And could this end up going very wrong for him where he's not right this time and it's like that much of your portfolio, it will derail like the results of it. So
that's a good question. Everybody always has to remember when these filings take place, they're 13F filings, which means one, it's just one point in time. We never know what Michael Burry has today. And two, there's like a 6-week delay between when he files them and now. So in theory, he could be out of those positions already. That's thing one. Thing two is, even if he doesn't have risk management practices, which a lot of funds do, like he has a lot of funds have a max loss of like 20% before you can exit a position or whatever. So options, that could happen pretty fast. So yeah, we don't know if it's an active position. We don't know how he's thinking about it. I mean, it is all like a little behind, like we are a little behind him, so he could already be out. But I do agree in theory with the Palantir trade, especially if you think the market is topped out. Like, I think just for example, Nvidia is a little tougher, but for like for example, you saw their valuation isn't so inflated that let's say you wanted to short like one of the names we like LEU or NBIS or something like that, that could really blow up on you on earnings. It would be the valuation that Palantir is at, and we kind of saw that yesterday. They had a double beat. The guidance was good. Like the amount that they have to beat on earnings for that to ruin your play is very difficult. The main risk, as I see it, is some kind of new deal being announced or something like that. That could rally the Palantir crowd. I do have to say, Alex Karp did sound like a bit of like a whiny little bitch about this when he was asked. It was just like, I mean, he's supposed to be a bit of a weird guy, but you sound very insecure about Michael Burry shorting him. And he was like, and he kind of made it, he didn't even end up talking about Palantir. He was like, as one of his main points, he roped in Nvidia to that being, he was like, oh, you're betting against all the chips, like blah, blah. Like it's like, it is kind of funny when you're like leaning on another short position that he took, not even your company, it's the largest. You can't even think of enough good things to say about your company that you have to start talking about him betting against Nvidia too. I haven't had much of an opinion on Alex Karp one way or the other. I mean, people that have watched me for a long time, I mean, before I was betting them, know that I have some serious moral qualms with the way that Palantir as an organization operates. But yeah, that's kind of like funny to me, like how insecure he was about the short.
Yeah, I don't know if he puts on a show, because I've noticed that too. He's like so over the top, like confident, where it comes across a bit like in a way. And I think that's to help the valuation be more, I don't know, digestible for investors when the CEO talks like that. But he definitely does become very
yeah, it doesn't feel very authentic, but yeah, kind of a big baby. I think that as a responsible public like CEO, like he's got to know that he's like basically Palantir is the most expensive company of a large evaluation of their size ever, right? So you'd think you'd be ready to field questions about that, as opposed to being all insulted that a famous investor is shorting your stock. Grow up.